Hello, investors. Welcome to My Two Fields podcast, the show that helps you grow wealth, create passive income, and achieve your financial goals faster. I am your host, Damodar Mata, author, blogger, and financial advisor in Dubai. This is weekly market update as of 10th January 2022. Tune in every week for news, views, and market moves. Let's get on to the show. The title of today's episode is On the Back Foot. In this episode, we discuss the market moves in the first week of January, the investors' exodus towards value stocks, and the outlook for the year. The year started with a bang with the shares of Tesla, AMD, Nvidia, Ford, and Apple pushing higher. However, the global equities led by US indices were already on the back foot by the end of the week. The S&P 500 was down by 1.87 percentage. The Nasdaq was down by a whopping 4.53 percentage, and the Dow was marginally down by 0.29 percentage. The markets have retreated sharply in response to the surging treasury yields reaching almost 1.75 percentage and the hawkish tone of the Fed on the monetary policy. The mid-December meeting minutes revealed in on Wednesday last week revealed that a potential increase in the pace and frequency of the interest rate hikes during the year. The market has actually priced in 2 to 3 interest rate hikes during the year. However, some experts believe that there could be more than 3 interest rate hikes, and the hawkish tone of the Fed also indicates the same. The Fed also indicated that it is considering a contraction of its balance sheet in addition to the acceleration of the tapering. Basically, the Fed was into bond purchases since the advent of coronavirus. The Fed was actually buying bonds worth $120 billion every month. Um, Given that the inflation has been more than the target rate, the Fed initially was thinking or considering or stating that the inflation is transitionary. But now the inflation is proving to be sticky. So the Fed wants to contain the inflation. So they want to decrease the liquidity in the market by reducing the bond purchases. And at a later stage, they also want to consider a possibility of contraction of balance sheet by selling the bonds in the market, thereby reducing further liquidity. While these actions of the Fed are aimed at reducing liquidity in the market to contain the inflation, this action could also put growth stocks in pressure. And we've already seen this pressure showing on the Nasdaq stocks. Let's move on to Europe. European equities were also down on similar concerns of tapering and interest rate hikes, as the European governments are also wanting to or looking to contain inflation. The Eurostox index was down by 0.32 percentage, while the UK's FTSE was up by 1.36 percentage, mostly led by value stocks. Moving further to India and China, we all know that China is already facing a deep or a strong real estate debt crisis. Both its bond market and the equity markets are already struggling. To add on top of this woes, the hawkish tone of the Fed is further causing the markets to go into red. The CSI 300 index fell by 2.3 percentage last week, and the Shanghai Composite Index was down by 1.7 percentage. India. Despite weak global cues, Indian equities posted robust gains in the last week. The Sensex was up by 2.56 percentage, settling at 59,744.65, and the Nifty gained 2.64 percentage to settle at 17,812.70. As the interest rates outlook for the month and the year, as the interest rates are set to increase and the liquidity is drying up faster, there could be a shift from growth stocks into value stocks. And we've already seen this to a large extent, as 40% of the Nasdaq stocks have lost more than 50% of their value from their 52 weeks high, as quoting sentimenttrader.com. With the Nasdaq already down by 7% from its all-time high of 16,057.44. And if this slide continues, we could see some buying opportunities in the technology funds later in the year, particularly for long-term investors. Having said that, this is not a direct recommendation. Please consider your portfolio, discuss with your financial advisor, and consider your personal financial situation before investing in stocks. Okay. And also, please consider having a diversified and a balanced portfolio, which includes growth stocks, value stocks, blend with bonds, and cash and gold to sustain or to ride the volatility during the year. And with the earnings season around, the earnings are expected to be good, which is going to push the markets up, while the bears are going to push the markets down, citing interest rate hikes and tapering concerns. So this is going to be a good tussle between the bulls and the bears throughout the year. Volatility is going to be there. So it is, as I stated earlier, it is important to have a diversified and a balanced portfolio with growth and value stocks, blend with cash, bonds, and gold. This was a weekly market update as of 10th January 2022. I hope you found this engaging and valuable. Let me know what your thoughts are. Feel free to suggest any improvements on the content or on the delivery. Subscribe to my podcast on YouTube, Apple Podcasts, Google Podcasts, or wherever you're getting your podcasts from, and share it with your friends. Don't keep me a secret. Don't keep this podcast a secret. You were listening to My Two Fills podcast. I'm your host, Damodar Mata. Until next week, stay safe, stay invested.